Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
My inbox is a museum of unfinished conversations. Let's circle back. Is corporate for, I hope you forget. Economic models work perfectly in places where humans don't exist. Central banks don't perform magic, they just convince markets they might. The market can stay irrational longer than your patience can stay rational.
For the first time since going public, Alphabet has reported negative free cash flow. Why? Because it spent a staggering $45 billion on capital expenditure in just one quarter, while generating about $39 billion from operating activities. That's not a business in trouble, it's a business writing one of the biggest AI investment checks in corporate history. The question isn't whether Google can afford it today. The real question is whether these AI data centers and chips will generate enough future earnings to justify today's spending spree. After months on the sidelines, Japanese insurers are back buying long-term government bonds. In June alone, they purchased 600 billion yen worth of bonds, about $3.9 billion, of super long JGBs, the largest monthly buying spree in 3 years, reversing a $1.2 billion sale just a month earlier. That's significant because insurers are among Japan's biggest long-term investors. Add government efforts to channel more domestic savings into Japanese bonds, and the market may finally have the demand it's been waiting for. After years of worrying about who would buy Japan's debt, the answer may simply be the Japanese. While much of the world debates energy policy, China is busy pouring concrete. It now has 39 nuclear reactors under construction, more than the next 12 countries combined. India is a distant second with 8 reactors, followed by Russia with 7. What's even more impressive is the speed. China's projects have been under construction for an average of just 2.8 years, compared with a global average of 5.8 years, weighed down by delays elsewhere. Meanwhile, the US has no large commercial reactors currently under construction. For years, we have been told peak coal was just around the corner. Well, the calendar seems to have missed the memo. The International Energy Agency now expects global coal-fired electricity generation to hit another record in 2026 as electricity demand accelerates to 3.6% growth, up from an average of around 3% over the past decade. AI data centers, electrification, air conditioning, and industrial demand all need power, and right now coal is still answering the call. The energy transition is happening, but is looking more like an addition to energy sources than a replacement. Here's a statistic worth thinking about. Of 148 Indian Olympiad medalists between 2011 and 2021, only 18% remain in India today, while 59% are based in the US. The trend is even starker in math, physics, and informatics, where over 60% have moved to America. Chemistry fares a little better, with 35% staying in India, but the broader story is clear. India is exceptionally good at producing world-class talent, but not yet as successful at retaining it. As India's innovation ecosystem matures, the real competition won't just be creating brilliant minds, it will be giving them compelling reason to build the future here. Here's an interesting contradiction. Foreign portfolio investors sold a massive 1.8 lakh crores of Indian equities in FY26, yet foreign promoters were quietly increasing their ownership. Of the 156 Nifty 500 companies with foreign promoters, 21 increased their stakes, while the number cutting holdings fell from 53 in FY25 to 40 in FY26. That's an important distinction. Portfolio investors often react to short-term market moves, but promoters know their businesses better than anyone else, and they're putting more skin in the game.